Hey guys. Okay, hold on a second. Can you guys hear me? Just want to do a quick sound check. Make sure you guys can hear me all right. This thing, they changed a few buttons around here on me. Okay. All right, just give me a second here because I didn't think this thing was running. All right, hold on. Okay, cool. All right, guys. So thanks for joining me. Just give me a second here and let me just get my thing going. Just have I just got to get my charts up. Just give me 1 second, you guys. Thanks for your patience. So, okay, hold on. So, in today's episode or today's session, buy signal that looks really good at the moment, but there's a particular reason why we chose not to send that out. And that's what I want to talk about because it's an important lesson that people need to understand. Not all buy signals are the same. Okay? And it's really about having a very well-defined strategy and following the strategy. So what a lot of people do is they'll just jump in anyway because they're like, hey, I just want to make money. I don't care. I don't care. Buy signal, whatever. They're all the same. Okay? And that's when that lack of structure in your process will lead to a lot of confusion. Okay? And frustration as well. All right, so hold on. I'm just getting this up here. Just give me 1 more second. And then and by the way, if you guys have your stocks that you'd like to see, put them in the channel. And I will, when we get to them, we'll take a look. I know I had a couple in the free chat room that I'm going to get to. And any other symbols or markets you'd like to see, put them in the channel now, and I'll get to those once we get through the general part of the analysis here. Okay. All right. Hold on. This thing's just giving me a hard time. Just 1 second, guys. All right. I should have this up here in a second. See, I didn't. YouTube changed a few things around on me, and it threw me off because usually I have everything set up in advance, not while I'm in the middle of a stream. Okay. So sorry about that. All right, just give me a few more seconds. By the way, if you're new to Greenbridge Investing, make sure you check out greenbridgeinvesting.com. All right, we have swing trade signals by text and by email. We also have portfolio management ideas, and we have analysis and perspective that we share in our chat room every day. Okay, so definitely check those things out. All right, and here I should have my charts up here momentarily. Okay. Let me just put that there. Okay, guys. One second. All right. I can get this thing started now. So let me see. Who do we have here? Alice. Sure. TUI. Okay. POW. Okay, cool. Got you. Okay. Oh, sure, sure. Sure, Michael, no problem. Okay, I see what you guys are putting in the chat. All right, so let me get this thing started here. Sorry about the hold up. I wish YouTube would have told me that they changed a few things on me here. Okay. All right, so as you guys know, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, you know the slide. Now, and one thing I want to point out too, really quick, is this week, with today's Wednesday, Friday we have NFP. Okay, it's usually on Friday. I mean, sometimes they've changed it, but it's very rare that they do something like that. The calendar I looked at said it was on Friday. So that's the most important economic report that we get each month. And it's important to be aware of it because things can change quickly as a result. There may be a surprise in there that people weren't expecting. We can't sit there and predict the report, as some people like to do. We don't know. What the ideal situation would be a non-event. Okay? All right, so let me go over Bitcoin first, and then we'll go over some of the other major markets, and then we will get into what you want to see. Now, so Bitcoin, let's talk about the buy signal. All right, so we had these inside bars, and I was talking about this. I wrote something about it on TradingView, and I said there is a buy signal there. But the problem with this situation, the reason why we stepped away is, well, it's likely to go higher, but the question is how high. The problem that we're facing is we have this resistance zone. People don't want to acknowledge that we're looking at this, what is it, 11.6 to 12.2. That zone had an effect just a few days ago, right? And dating back, if we go back, all the way back to August of 2019, there was also an effect. So probability says that buying into this now is a risky idea. It's very risky. Selling may pop in right at this high again. You may get a double top. It may go a little further and lure in all the breakout traders hoping for a breakout and then pull back. Why are we going to take that chance when the support is around this level here, 10,500? That's where the high probability support is. So if we took the buy signal now, we would have to risk a lot more than what we can possibly make potential-wise, because the thing is, what if it doesn't clear this resistance? The trade's going to be worth a couple of hundred points, and we have to risk how much? A realistic risk. You could put your stop below this area here, but chances are you're going to get stopped out if this thing turns. Like, you're going to get stopped out right away. So if you bought the breakout, the trigger was at 11.4, let's say 11.450, okay? A little higher than 11.420. Let's say it's 11.450. Right now, where are we? The high is 730, and we're at 686. So the trade would be worth maybe 150, maybe 200 points at this point, right? But we wouldn't be closing it right now, because what would be at risk? And this is the key part of the lesson. What would be at risk? If we bought this thing at 10,450, okay, which would be where our buy order would have been, realistic risk would have been below 10,500, okay? So you're looking at, probably about 1,000 points of risk, something like that, realistic risk for our swing trade strategy. Now, I emphasize swing trade strategy because we're following the rules of our strategy specifically. Now, for a day trade, that's a different story, because you're not going to take that wide risk on a day trade. You're going to take a much smaller risk. You're going to risk, a couple hundred points to hopefully make a couple of hundred points, right? That's worthwhile, but we're not day trading, all right? We're swing trading. We're also not position day trading, which is trying to carry it for the day, because again, the probability of the location is not favorable. Our method prevents us or tells us not to buy into resistance zones. We buy into support zones. That's where our probability is favorable. So although this looks good at the moment, this may turn, and if it turns, everyone's going to get caught in it, except for us, because we're not in it. Okay? That's what we avoid. And now, that same situation, you could say, well, what if it breaks out and blah, blah, blah. But what if we have this situation that occurred back here? This was an attempted breakout, okay, back here, originally at that 10,500 area, and it gave it all back. Okay, this is why we don't buy highs. So we're going to wait until this thing reaches our level. Now, the other scenario is if it breaks out and has a nice solid breakout, we'll wait for the next retrace, okay? And that support level, that new support level, which we do not see yet, will probably be around these current levels where it is now. All right, these old resistance areas right here. What is that? 11.4-ish, around there somewhere. All right, but we will not know that until the breakout is confirmed. So the point here is not all buy signals are equal. It's all dependent on your strategy. And our strategy says do not buy highs. because we look at the probability of the location, not just the signal. And this idea, although it's counterintuitive, it doesn't seem right because, oh, you guys are missing out. We don't have any fear of missing out because we know that opportunities are infinite and our capital is not. We also have followers that follow us, and we don't want to get them into situations that they might not understand how to handle or get caught in and all that stuff. So we have to be mindful of that as well. So we simply wait, and the market either gives us our price that we want or it doesn't. And that's why we have a pretty consistent record, is because we follow our rules. We don't follow any feelings. We don't follow any fear of missing out. We don't follow anyone else's opinions. We don't follow anything but our rules. I don't care what the news is. None of that affects our decisions for something like this. So we step aside, okay? I don't care if this thing runs to 15,000 on this leg. People say, oh, you guys are stupid. Well, no, we follow our rules. And we don't lose money by watching this thing go higher without us. Our account does not shrink. But if we buy it and the thing pulls back to where we were going to buy it originally, not only will we be losing money and getting stopped out, but we become a weak hand, okay? And that's another thing that people do not realize. When you buy into a low probability area, which is what we're in right now, and it turns, now you're in from a bad price, which means psychologically, you're going to be a weak hand. You're going to be more unsure. You may bang it out too soon. You may say, oh, I'm going to hold it. I'm going to hold it. And that one time, it may break the support. There's no guarantee that this 10,500 will hold. There's no guarantee. And that one time, it goes to 9,500 on some stupid news, okay? And then you get caught in that. And then you bang it out at the bottom because everyone's saying it's going to 6,000, and then that's where we're buying it, okay? That's what you need to understand. That's how this works and why we follow our rules, which prevent us from getting caught in such a situation. So I know I spent a lot of time here on Bitcoin, but that's a very important lesson that new traders really need to understand. When they don't understand, why don't we take a buy signal when a buy signal pops up? Buy signal is not, we look at other criteria besides the fact that there's just a signal. All right, so any questions about that, please let me know. Now, let's take a look at some other things here. I want to take a look at the NASDAQ. I've been forgetting about the NASDAQ. I've been forgetting to talk about it, and that's not cool because I'm on top of this thing, right? Now, look at this. So Andrew sent out another short signal on this, another short idea. Was it yesterday? And the thing is, look where it's at, right? This thing broke out. This thing is broke out, but these are not very decisive candles, okay? I don't see a nice solid candle closing on its high. I see small little spinning top type candles in an area that's still very vulnerable. Just because we're slightly higher doesn't mean that this thing can follow through. This is extremely vulnerable. And if it's very slow and complacent, people get, they feel safe. Oh, the news is saying new highs in the stock market. Oh, well, else is new? The stock market makes new highs every day. The stock market's strong. I'm just going to stay long. But this is a very vulnerable area, tough spot. I'd be very hesitant to take new longs. And now we've called longs in a bunch of different stocks that were coming off of support levels and things like that, and we give them a try. But we're conservative, and we won't do too many, because if this thing pulls back, all right, which it's in a position to do right now, that pullback is going to affect a lot of stocks. Not every stock will be as sensitive to this, but you better believe the major ones like Apple and Amazon and the rest of those, which this is what this reflects, they're going to get hammered. All right, and then people right away, oh, these things suck. Oh, the stock market is in a bear market now. No, it's just a healthy pullback that we've been due for. So with the NASDAQ, I wouldn't be going crazy buying or heavily buying. If you're taking 1% risk, okay, fine. But the mistake you don't want to make is you don't want to have 50 different positions on, because when this thing pulls back, then you're overexposed and you get caught. There's two inflection points that I'd like to see on this NASDAQ. Okay, the first one is right here. This old minor support at 10,770 area. Okay, around that area, that's right in the middle of this consolidation. That might be a good place for a new long as far as stocks go and as far as the NASDAQ itself goes, if we call a swing trade in this CFD. but the better spot would be the low, the failed low. All right, 10,103. So maybe that 10,300 area, slightly lower, would be ideal. Again, we can't just put these orders in there and then forget about it. We have to wait for confirmation. Now, if that level is taken out, if we take out 10.3, then the next support is going to be like around this 10,150 area, something like that. And if that's cleared, you're looking at like this 9,700 area. So those are those inflection points are the ones that are more relevant right now. I mean, I'm not going to talk about this one all the way here on the bottom because we're just not even close to that, so it's not even worth talking about. But those are the points I'm talking about over the next couple of weeks. We'll see if the market delivers one. But remember this, as it's pulling back, do not overreact, because a common mistake is people think it's going to zero, especially when you see all the nonsense in the news, because in order for the market to pull back in such a way, there has to be a catalyst. Okay, and often that catalyst is in the news. People think it's the news driving the price, but the price was set up to pull back to begin with. Okay, so keep that in mind. The second thing is buying too early is another common situation. It pulls back a little bit, and right away, is this good enough pullback? No, we have to see if it's at an inflection point, number one. Number two, we need a setup. Okay, so that's what we're looking at for the NASDAQ. Now, let me take a quick look here at, we had a question about gold and silver. Well, pretty much silver, but gold, pretty much silver is following gold. All right, so if gold pulls back, you'll see the pullback in silver. Silver's not going to pull back on its own. Gold is vertical, still vertical, right? There's really no buying opportunity except for this tiny little consolidation, which would have been a very, very tough long. This would have been very tough, right? So you can't touch this, okay? This is the herd mentality in action. Buying, you don't know where that top is going to show up. And of course, you buy it, it goes just a little higher and you're like, yeah, all right. And then you get the pullback, okay? So you just have to step aside. I don't care how positive the news is. I don't care how great the fundamentals are. You should have been long at much lower prices. And this is a place to be capitalizing on and locking in profits, capitalizing on all these buyers. That's what market makers do here. That is what professionals do here. They don't buy here, okay? Especially for broader time frame strategies. If you're a day trader, it's a different story, but we're not talking about day trading. All right, so I wanted to run by that, and then I want to do one Forex pair. Let's talk about this dollar Canadian real quick, because we had a trade in this thing that got stopped out, okay? And I want to talk about that because we're still interested in this thing, right? So we took this trade, it triggered. I want to point this out right here because this is a good lesson about stop outs. We saw this outside bar develop. We took the trade in here, right? It was 32.50, I believe, which was tapped in right here. 34. 34.51 was tapped right here, and the market just did not go our way. Okay, it went straight to the stop. Now that's going to happen, all right? But stops protect you. Stops save money. I know I've said that many times, but I can't tell you how true that is. If you do not have a stop, what if this thing keeps going? It can. What if it does? Right? You're caught in it. And then you're more likely to make that emotional decision at the bottom, banging it out when it looks its worst, when really that's the area that you should be looking for a new buying opportunity. So that's where we still are with this thing. And this thing is still in an area where it can reverse, okay? We're still lacking the setup, but we have a nice double bottom potential. We just need a pin bar, which we do not have. This is not a pin bar. So we need that pin bar, and this will be worth buying at least for a retrace up to this area, okay? That's very reasonable. That's not even a trend reversal. So, or I should say momentum reversal. You know why? Because the trend is still actually, we can still argue that the bullish trend is still in effect. This bullish trend here is still in effect. We have not taken out the low of that. So although it's looking ugly, we can say that this is just a pullback or a very large wave 2 in that bullish trend. That's trend, the broad structure. Momentum is all the small price action that you get. People get confused when I mention that, especially on TradingView. And that's what I'm talking about, okay? Trend is the entire thing, And momentum are these little movements within that trend. Sometimes you can have bearish momentum in a bullish trend, and that's what we've been seeing here for a while. Many will mistake this for a trend, but this is not exactly the trend. And that's where buying opportunities appear that they cannot see, because we're looking for a buying opportunity while the bears are just hammering this thing, thinking, oh yeah, the trend's bearish. But there's a high probability that this thing turns, all right? And we want to capture that. So that's still on our radar, even though we got stopped out, okay? So keep that in mind. By the way, if you like this channel, please subscribe. And if you like my video, please like the video so that, you encourage me and I make more of them. All right, guys. So let's take a look at your questions now. I think I pretty much covered the markets that I wanted to cover. Oh, all right. Before I get to your stocks, I just want to run through a couple of things. And you guys may have questions about these. Some of the stocks that we've been tracking or have positions in, okay, like Workhorse. Now, this Workhorse was a play of the week that we sent out with our podcast. And take a look at this, right? So the buy limit was 1585. The first target was 1985. And what was the high on this thing? 1965. What a pain. What a pain. All right, but what do you do now? Do you bang out of this thing? Well, no, it's still in play. You just let it do its job. Okay, today it's fooling around 1693. It doesn't look great, but the thing is, we have to let it play out. Okay, you can't second guess these things. Hopefully, it finds support and continues. Now, this higher low is still in place, and you can't lose sight of that. As ugly as these candles may get, what if it only pulls back just a little bit more, and next thing you know, it's pushing the next high? We've seen this situation so many times, okay, especially like in Forex pairs. So just have to be patient with that. That was one of them. The other one, there was another one. Which one was it? Workhorse. Oh, ADVM. ADVM. This is another one that this wasn't a play of the week. This was an actual trade that we sent to members. Okay? And as you can see, same reasoning, right? Same reasoning that I'm looking for like in dollar Canadian. It's like a double bottom situation. The broader structure is bullish. There's nothing bearish about this. Although people like on TradingView would probably argue with me and say, oh no, the trend is bearish. The trend is definitely bearish. This is not, this is just a retrace of the bullish trend. And now look, we get the failed low situation here at that support level. And this thing is on its way, right? Where's the first target? 1825. What's this high over here? 18. Oh, so it reached its first target. Nice. All right. So that's a nice example. I didn't even realize that. I didn't check my my positions. 1837 is today's high. So that's what we like to see. Our risk is now reduced by 1/3. Okay. So that's that's how this stuff works. All right. So enough of those. I think I covered those. I know I saw some questions here in the chat about like what's it called? HARP. So we're going to take a look at that. All right, you guys. So Alice, let's start with Alice here. Can you go over TUI? All right. So let's go over TUI. All right. TUI. What is TUI? Why didn't it show up in my window here? TUI. Okay. So, all right. Now I'm not familiar with this one, but let's see what we got. Now notice those other stocks that I just pointed out. Let's see if you guys can get this one. Little quiz for you. What did those two other stocks, ADVM and Workhorse, what did they have that this does not have? Can anyone tell me? There was something on those charts that those two stocks had, and this stock doesn't have. Can anyone answer that question? And if you can't, it's okay. If you guys aren't sure, it's okay. So while I'm waiting for those answers, let me take a look at some of those questions here. But listen, okay, if you could please, yeah, VXRT and BLDP. Okay, what about, and I think also GRA, POW. I think you also mentioned GRA. See, I have a good memory. Okay, guys, here we go. All right, so POW, DJ, Hack, yes. The other stocks compared to this stock, the other stocks did not have this situation going on here. Okay, this is bearish price action. All right, the other ones were bullish, clearly bullish. So I bring that up because right away you're dealing, that's still something you're dealing with. Now, we have some sort of change taking place, right? It developed this higher low, okay? It took out this previous high over here, this lower high. It took that out, but 424, it took that out. Here, let me draw a line on there so you guys can see more clearly. Okay, see, it took out this level here, which is a start. That's a start of a change. It doesn't necessarily reverse this trend, but it's a start, right? So now this thing again has been sort of drifting, and here we are at another potential higher low. So what do I make of all that? Well, I do like the fact that there's another higher low in here. That's cool, but that broader trend can be somewhat, that would make me a little bit more conservative in terms of targets. I would not be very optimistic about this thing like pushing all the way back up to, you know, resistance like this one over here, 778. I wouldn't be very optimistic, although it can happen. The way I would handle something like this, because you do have strength developing, it's just not very compelling. This is mixed. Now, there's two ways you can go about this, right? The conservative way would be to wait until it proves its strength by breaking this resistance right here, right? Which means you have to wait for, you know, worse. You're not going to get the best prices, but, you know, at least you're buying it after it proves itself, right? 392, that 392 area, that's one thing you can do and take a small position. Otherwise, you can take a small bite now in this area and see, you know, and then maybe perhaps add to that on the breakout. But the risk that you run is that this thing starts testing those lows again, okay? Which is likely, you know, in this type of situation, because again, this thing is not coming from the greatest structure, right? There's a lot of weakness in that, and it may reassert itself. So you have to be careful. That's the only hesitation I have with something like this. Okay, so great question, Alice. I hope that answers your question. All right, so let's see. So Alice is in from 360, okay, at 750. I had a sell limit at 780. Okay, now I'm thinking about closing the position. Okay, because you want to go on vacation. Well, I mean, I'm looking at this in, what is this thing? Priced in GBX. Are those British pounds? Okay. Well, here's the thing. I think I got the right stock here. TUI. Let me see something here. Maybe I have the wrong exchange because I'm not seeing those prices. There's the British one. Oh, here's the American one. Oh no, that's okay. I guess it's all the same, just different exchanges. All right. So to answer your question, Alice, I mean the thing is coming off this low. So at this point, it's okay to give it a chance to at least run up a bit and maybe trail your stop along the way with it. I mean, that's another thing you could do if you have a position. Trail your stop. If it takes out these lows, you're out. But if it runs up, at least, you know, you're back in the green, or you're taking profits at a better price, because it does have some potential. Okay? So wanted to point that out. All right? Now, Pau asks VXRT and BLDP. Let's take a look. Let's take a look. All right, so that first one is VXRT. Hold on, I can't type today. VXRT. And what is this? Wow, that's an interesting one. That's the herd mentality there. Okay, this is definitely something news driven, clearly, and I can tell from the price of the stock, it's definitely a popular one on the day trader radar when it does stuff like this. All right, imagine you throw around 5 or 10,000 shares, which is what they're throwing around on such an inexpensive stock, when it's moving from, you know, $2 to what the hell is that? $16 in just, you know, in a matter of days. Now, in this situation, for one, this is a little too. I don't like to see this verticalness. That's not even a word, but I don't like to see that. This is a sharp pullback. This is a tough spot to buy. I mean, the location is definitely better than these highs, for sure. But the thing is, in this situation, because it's wild like this, you may have another Kodak situation where, you saw Kodak go from like $50 and it's almost back to two, right? Like this thing is, I suspect that this thing may do something like that unless it can provide some more structure. A straight pullback sometimes is, I don't like to see a straight pullback a lot of times if it's this vertical, if there's that much momentum, because this is really a sign of momentum. All right, what I would like to see in a situation like this is some sort of mini consolidation, like a failed low. That would be more compelling, at least to give it a try. Okay, because here's the thing: your first inflection point, realistic inflection point. Now we can find one sooner, but this is the first one right here. All right, now how low is that? That's $4. So that's a key support. And it's possible that this thing can get nearer to that. So I'd prefer to see some sort of structure before getting involved or before measuring risk. This is lacking structure, although the location is not bad. Okay, so interesting stock. Thank you for bringing that one up. The other one you have is BLDP. Let's take a look. BLDP. And I'll get to the rest of your questions as I go through here. I really appreciate everyone's participation here. Thanks for asking these great questions. No, man, today's a rough day, guys. I can't spell stuff right. BLDP. The computer's giving me a hard time. YouTube tricked me. Okay. So let's see. Okay, similar situation, but right off the bat, here's what I'm looking for. Inflection points, right? Got one right here. And it bounced off of that. Nice. Interesting. Now, here's the thing. So you have this initial bounce trying to develop. This is tough. Just like the other one we just looked at. You can get that lower high. I'd prefer to see the double bottom, especially at this support level, which is $14, around that $14 level. If this thing can give you a retest of 14 and then develop that pin bar or something like that, that would probably be the ideal place to take risk. Otherwise, maybe you get a higher low. It doesn't go below that support, and that would also give you an opportunity. What's nice about this is it's got some potential here to run, at least test that high. Like, even if it goes halfway, what are you looking at? $18.52. So, you're risking perhaps about $2 to go for 4, maybe a little higher. What's this high here? $21. So you figure 20 is probably going to be an inflection point. So it's definitely got some potential. I would just wait for a clear setup. You don't have a setup here. Great location though. Great one for the radar. This one goes. I thought the name looked familiar. This one goes back a long way. I remember this one from back in the day. I remember this one from a long time ago. People used to talk about this. So cool. I can't believe this is still around. All right. So and then you had one called GRA, I believe you mentioned. GRA. Let's take a look at that real quick. I know you put that in the other chat room there. GRA. And now GRA, here we go. Here's a situation where you have some nice bullish recovery structure. Yes, we can argue that there was this bearish stuff, okay? But you do have, when the market comes back like this, that's a pretty decent comeback. It definitely took out like the halfway point of that bearish momentum. And we all know why that momentum was there to begin with anyway. So it tried to have a recovery. Okay, so I'll go with this structure and consider this structure bullish. Now, you have the pullback. So sometimes, it can be confusing because you're like, oh, but this is bearish and you have a lower high. Okay, that's true. But the thing is, you do have a series of higher highs and higher lows, and it took back most of this bearish move, which cancels out this bearish momentum. Not only that, you have this consolidation. I like the horizontal character of this consolidation. That's basically a sign of strength. Wherever you get higher lows, typically they're followed by higher highs, right? You also have a failed low. So you have a few things lining up here. What's this price? Let's see. What's this price area? 46, what is that? 46.5 generally, around there. and you had an inside bar yesterday. Tried to follow through today. It's a little hesitant, but okay, no problem. This, I like the location. It's in a failed low area. You know, on something like this might be good to play with a limit order, where you put a limit order below the market. Okay, like around, what is that, maybe 45.25, something like that. If it takes out the low, you know, you give it maybe a 2 or 3 point stop. What's this low over here? 42.60. So you figure around 42, something like that. And if this area holds, these can be tricky, but if the area holds, you know, the next leg up should take you, in theory, beyond this resistance, beyond the resistance of the consolidation. Again, these can be tricky. And also, if the broader market pulls back, that's something you have to keep in mind as well. Obviously, this thing is showing me here that it follows the market somewhat. The market got hammered, this got hammered. The market recovered, this thing recovered to a point. Okay, it didn't do as well as the NASDAQ, but it recovered to a point. So something to keep in mind, if this thing is going to be sensitive to the market's been making new highs, and this thing has been kind of struggling a bit, so don't lose sight of that. This thing may bounce, but if we get that broader pullback, this thing, you know, is acting somewhat relatively weak. So there is some conflicting information there, right? None of these things aren't going to be perfect. Some people may find that confusing and say, well, you said the stock is in a good location to buy, but now you're saying that the stock market is, you know, if it pulls back, then this is not a good place to buy. So what do? Well, you have to focus on your location, right? Your setup, your location, you follow your rules. Now, if the broader market is a gauge, it helps. It acts like a guide, right? And sometimes it's going to help you. Like if the broader market continues higher, this thing may have some room to at least make an attempt. If the broader market pulls back, which it's in a location to do, but we've been saying that for a while and it doesn't pull back, you know, then you may get caught in something like this. But that's a chance that you take. Okay, and that's why we have stops. So don't be confused by the information. You know, just understand that there are different moving parts here, and the part that really you have to focus on is your setup and your levels, right? That's what we do as technical traders, looking for broader price momentum, because that's all we're looking for. I'm not looking for fundamentals. I could care less what they do. I could care less what their earnings are. All I'm interested in is are there buyers in there right now, and where should I be taking my profit? Okay. I'm looking for momentum. All right, cool. So thanks for bringing those up. Alice, let's see. Only a few that took a vacation. So I think the result will be really bad. And if the markets, okay. All right, Alice, you know what? So with that being said, yeah, if you're not comfortable with the risk, by all means, you know, reduce the position, exit the position completely. Because again, this is all about your own risk tolerance, right? And if that's your idea, if you're wrong and the market goes higher, well, so what? There'll be more opportunities. But if you're right and the market goes lower, you'll be happy you got out. So just something to keep in mind. Okay. Pow also got stopped out of LC. No, it looks like a strong failed low. What do you think about getting back in? Okay, LC. Let's take a look at LC. We got a lot of questions today, guys. Thanks for all these questions. Lending Club. Okay. So bearish situation, right? Definitely bearish situation, not bullish at all here. But now it's trying to turn. So you have the failed low in place, right? See how this bottom developed? Failed low in place, recovered off of it, and now it's trying to develop a higher low. Now this isn't a bad location. What's your risk here? Well, this thing, the low is $5.17. What's this low over here? $4.32. I mean, you could put like a $1.50 stop on this thing or $2 stop. That should be plenty. If this thing goes lower by $2, shouldn't be in it. Okay, like just leave this thing alone. So it's not a bad location. You do have some structure, some recovery structure in place. As far as potential goes, you got some room here. The first inflection point is here, which is $10 basically. So you got some room, right? So from $5 to $10, you're risking 2, try to make 3. Maybe if you can make 4, that's good reward risk. So yeah, I like this. This might be a good one for options too. I don't know what the options situation is because I haven't looked, but this may be a good options play where you maybe get some cheap calls, maybe a month or 2 out, maybe 3 months out. If they're cheap, they may be cheap with this situation. And you know, you may not even have to buy the stock, but don't quote me on that. I haven't looked at the options. I bring up the options because I'm going to do a webinar. I'm going to do a hands-on webinar where we're going to talk about hands-on examples of how to buy options on some of these ideas. Okay, like Pinterest. Okay, so let's take a look here. What else do I got? Michael, can you cover HARP? Yes. Let's take a look at HARP. Now, Michael, man, you asked that like an hour ago. All right, let's take a look at HARP. Got a lot of questions today, but that's okay. That's what I'm here to answer. Now, HARP. You can see this was a trade of the week that I sent out. We talked about this on our podcast, right? And this is the chart that I sent out very, very early on Tuesday. Now, when I sent this out, the market it looked like this, okay? It looked like this. We only had the pin bar was in place and we had this green candle. This is how it closed on Monday. Now, on Tuesday, we got that. The order, the trade that I put out was a limit order at 1150. And I said, because these things can be very noisy. And that's what I was looking to capitalize on. Tuesday's low was 1192. It never filled. Okay, so you made the question maybe then why did I send out a limit order instead of a market order if this thing looked so good? Well, because again, these inexpensive stocks that have this type of price action, they're noisy. And I figured just like Workhorse, why not try to capitalize on that noise? Because I'm not in a hurry to take risk. Okay, I liked the location. I liked this pin bar setup, but by the time I saw this, that pin bar was in place. And Monday, when I sent this out, this candle was closed, so I couldn't buy it in that candle. So the only other choice I had was buy the high, 1235, on Tuesday, buy that breakout and hope for the best, which is something you can do if you're willing to take the risk. But the risk is a little higher at that point. And it's like, I don't want to have too many of these positions on. So either the market fills me at my price or I don't take the position. All right, now this thing, as you can see, it's a little red today, right? This thing may pull back and fill. What's today's low? 1243. I mean, it's got a what is that? It's got like $1. It can still, this thing can still fill, and you'll get a nice higher low. So that price that I chose had a better reward risk, and again, I was betting on noise. So this is why you don't chase. Now, if you had bought 1235, if you had bought that, now basically this thing's at 1269. You're not really up that much. Now you have to hope that this turns into an inside bar and follows through. Now, another choice that you have in something like this, because it still has some potential, this inside bar may actually become a new buy signal. Okay, if tomorrow it takes out that inside bar high of 1305. Just keep in mind, every time you're buying it higher, you have to recalculate that reward risk because it's not going to be 3.5. All right, as long as it's over 2 or 1.5, I mean, we'll even take trades at 1-to-1. But you want to make sure that that reward risk is somewhere around there. And also for stocks like this, because again, these are speculative stocks, you want to make sure that you're risking a small amount of your account, like 1%. That's why these are all like 1% trades. You never see us risking 10%, not even 5%. Our max risk is 3%. That's another common mistake that people make. They put on a giant position, not realizing how much of their account is at risk. If you risk 15 or 20% of your account, if you're right, you're going to feel like a hero. If you're wrong, you're going to wipe out your account. That's not the way this works. That's also called gambling. Okay. So now let's see. Alice, TUI1. All right. So I guess was that symbol that I looked at wrong? I'm going to type in TUI1 just to see if it shows me a different chart, and maybe it will. Okay. Same chart, but the prices are relative to what you were talking about. Same chart. Okay. So yeah, I mean, relatively speaking, price-wise, it does have a little room to run. Like I said before, it does have some room. But if you're not comfortable with the earnings situation and you don't want to get caught, by all means, it's always better to mitigate risk, not take more risk. Okay. Now let's see, what else do I have here? I went over HARP. Now, asked about it before in the chat. Now, T1, I'm hesitant to get filled on the pullback. Yeah, so Michael, like I said, yeah, let it either it pulls back or we get a new buy signal, which you can still work with on something like that. Like I said, just keep an eye on that reward risk. MCO USD. Okay, Hack, let's see. What is that? MCO USD. Is that, let's see. MCO. Obviously, this looks like a coin. I'm not familiar with this. Yeah, it's on Bittrex there. MCO. So, your question about MCO, will it go higher? Well, look, you get these weird moves. Right away, I don't like it. Okay, I don't like these random pops. Okay, that to me just looks suspicious. Number one. Will it go higher is your question. Well, just looking back, this thing is range bound. Okay, I see a giant range. The bottom of the range is actually around here. Don't go by these extreme tails. You have to go by the average, and that is 2.5. All right, and the high of the range, the more recent range is around this level here, which is around 625. And you're fooling around nearer the 625. I would stay away from it. Okay, I don't like it. It's near the higher part of the range. Now, if it clears 625 and pulls back and retests as a new support, that's a possibility. But I mean, look at the way this thing moves. Maybe, you know, you get lured by, it went from $4 to $5 in one day. And you're like, wow, I could have bought, you know, 10,000 coins and that would have been a lot of money. But look at all this movement in here. This is your typical movement. Look at all this. So from April, let's see, from April, going into April, there was a high of $5.77. And going into May, I mean, it was fooling around those same numbers, just fluctuating around. What a pain. So I'm not a big fan. You know, will it go higher? Possibly, but you're near the range high. I don't like things at their range highs. Okay, buying the middle of the range is also usually a bad idea. If you can play with range, you should be near the low of the range. That's where your opportunity is. That's where your probability is more favorable, and you have better potential there as well. So you have to be patient with things like that. Okay, it may not go to the low of the range the way this thing's moving. You may not see that range low for a while. Okay, so thanks for bringing that one up, because that's definitely one that's not on my radar. Let's see what else we got here. Let's see. I got that one. Okay, so Michael, S&P 500 looks a little better than the NASDAQ. All right, let's take a look at the SPY. All right, which is the Spider Index. Now, the NASDAQ, you know, the NASDAQ is in that area where it's attempting to break out. But I have a problem. I've been having a problem with the S&P. And it's tricky. It's conflicting. It could be confusing. Hold on a second here. Let's take a look at this SPY. So the SPY, and this is the problem that I've been having. The NASDAQ has been pushing and pushing, pushing highs. This thing still hasn't pushed its highs yet. You know, if you watch on TV, they'll say, yeah, the S&P 500, all-time highs, blah, 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 this and that, you know, buy stocks. Okay, great. Breakout. Okay, great. Those are all good things. But we cannot lose sight of this high. We cannot lose sight of this high. We haven't cleared that yet. So to me, this is very vulnerable. Just like the NASDAQ, this is still vulnerable. And although there's some room, there's still some room there for the thing to push higher and to really lure in a lot of longs, which is great for our stocks, okay? I would be very hesitant to be expecting long-term profits or long-term bullishness in this type of situation, meaning I wouldn't be going crazy buying stocks and investing in stocks in the long term based on this location. The location to do that was, you know, these lows, after the fact, sure, oh yeah, after the fact, you can say that. But the thing is, I'm interested in doing that at lows, if I'm going to do long term, not at highs. So this thing is still vulnerable in my opinion, although it's got some room. And if this thing tests that high, it's definitely going to take the NASDAQ with it. NASDAQ's going to go higher. And it's going to blind a lot of people, in my opinion, but not us. We're still going to be careful. Okay, and we're still going to be finding our buying opportunities and rotating out of them and putting that money into another opportunity until this market turns. All right. Oh, okay. Yeah, so I hope I answered that question there. Because yeah, that's what I'm looking at, Michael. I'm not looking at day to day. I'm looking at those broader levels, and that's what I'm measuring against. Okay. Yep, the metals, we talked about that. Right. So let's see if I have any other questions here. Can you look at TSM? I'm interested in taking a position. All right, Henry, let's take a look. TSM. Great questions, by the way, guys. Great questions. So by the way, if you're new to Greenbridge, make sure you check out our website at greenbridgeinvesting.com. Make sure you subscribe to this channel. Make sure you like it if you like my video. We have, at Greenbridge, we have swing trade signals by text and by email. I mean, that's I don't go over those, those are the trades that we send out that I review some of them here. But if you want those text messages and you want to get those trade ideas by email, those are different from trades of the week, okay? All right, so Taiwan Semiconductor. Oh, yeah, I remember this one. So I thought that name was familiar. Yeah, you got this vertical move here. I mean, I zoom out because I want to see, like, relatively how far we are from those highs. And here's the thing. Right now, so your question, Henry, I am interested in taking a position in it, or if I should wait for a better price. Well, Henry, take a look at this. Today's candle is a bearish pin bar, okay? It had a attempt at a breakout here, and if we close like this, oh, we're closed. The market closed. So the fact that we closed like this is not a good sign. That means they couldn't follow through, okay? I would not be buying this. Now, I would not be buying this until it retraces. This is not a good area, especially with that bearish pin bar, especially. So where would be a better place to buy? Well, you're going to have two types of inflection points on something like this, and you're going to see this across all those crazy stocks like Nvidia, like all those big names. You're going to see a lot of all these stocks that have experienced these really dramatic moves. They're going to have two inflection points. There's going to be a proportional one, and then there's going to be the historical one. Right? The proportional one is going to be probably somewhere around here, where it fooled around with these gaps. So what is that price? 73.25, around there. But again, you need confirmation, right? Because price can just go right through it. If the NASDAQ has a major pullback, you better believe this is going with it. Okay, this thing is the NASDAQ practically. So that's one area I'd be looking for the retrace, and I'd be looking to time that with the NASDAQ. The other one is this level here, which is, what is that? $60. And where are we today? We're at $81. It's hard to believe that this thing will pull back to $60, but the whole question is if the market provides such an opportunity, that would be a very attractive place, but we can't count on something like that. So in a situation like this, I would look for more of the proportional support, and I'd be looking for some sort of structure along with that, and I'd want to see the NASDAQ confirming as well in that type of situation. So to answer your question, yeah, I would hold off on this one because the location is just not attractive at all. Now, doesn't mean that it won't inch higher. It may inch higher, but it's the risk we're talking about. Because if we do get that pullback, you'll probably be happy that you didn't take that risk now. Remember, if you miss a move, you don't lose money. Okay? You can miss moves all day long, and guess what? There are going to be more moves coming. So always keep that in mind. People forget that because I guess the fear of missing out is stronger. So, all right, let's see. So a good question on that. All right, VXRT, okay, not following through today, going into earnings, considering closing it or raising the stop. Okay. Yeah, so I mean, going into earnings, obviously, Pow, that's a risk that you take, but hey, that's a gamble. Maybe it works out, maybe it doesn't. But one thing you can do, I don't know if you're green, because I forget what that chart looked like, but it never hurts to lock in something. You could take something off the table, before you go into earnings. At least you have something locked in. You reduce risk a bit. That's always something to consider. Okay, XETR. XE, that's the next one here. Hold on, guys. E. Oh, come on. X. My computer's giving me a hard time again. All right. Is that the right one? X. It's on the, sorry. I got you, Michael. That was the exchange. Got you. Okay, no problem. I was thinking about putting a long swing trade on Genus with a buy stop at 210. Genus, sure. Yes, I've heard of this Genus. G-N-U-S. I've heard of that one. All right, let's take a look. So Genius Brands, right. So Michael says here, I was thinking about putting a long swing trade on Genius with a buy stop at 210. Now, all right, again, herd mentality. Herd mentality. Pullback. Okay, great. You're not buying the high, Michael. That's right off the bat, good start. Now, so you were thinking about putting a buy stop at 210. So yesterday's high was $2. Today, 181. Okay, 210. Let's see. I mean, it's not a bad idea. The thing is, it's kind of, the location is good. There's no question. You're at an inflection point. Your risk can be measured by this low of 144. It really shouldn't go below there, or if it does, you should be looking for the failed low. So the buy stop at 210 is not a bad idea. Okay. Also, if you get the failed low and this thing goes to like 125 or something and then turns, that may also give you another opportunity, either to put on take a small bite and then, add on when it goes to 210 or something like that. You could figure that out. But this thing really shouldn't go much lower. Like if this thing takes out like $1, it's probably the best thing to do is step aside if it does that, which theoretically, if you're keeping, if you're responsible with your size, which I know you are, it's not a lot of risk. I mean, what's this thing going to do? Go to zero? We've taken much bigger risk on stocks, on much higher priced stocks, like the cannabis stocks, for example. So it's not a bad number, because again, if you do hold it and it goes to zero and you only had a couple hundred shares, well, it sucks, but it's not like it's going to pull back $50 on you and margin you out of your account. But again, it's all about responsible position sizing, right? Which I know, again, you are. A lot of people, they're not responsible, and they have a small account and they max out their position size because they think they're sure on this one, and then they get margined out. Okay, so good question. I hope that answers your question. I like the location, and it's got some potential. The only thing, Michael, is I wouldn't expect this kind of crazy movement unless there's some news that drives it again. And you're going to have day traders in this one as well, because it's cheap and it moves when it moves. So as far as profit targets, the $4 or $5 area would probably be a great target, at least for half of your position or something like that. All right, and maybe you put another target at a more aggressive area just to see if it gets there. But I wouldn't be overly optimistic, okay? So that's how I'd work with that one. Okay, cool. Oh, LC was Andrews. Go right. Okay, lending. Yeah, I remember that. Okay. No question on HARP is no, the question on HARP is rather if it's still active. Oh yeah, Michael. HARP is active. Okay. Just because it ran away a little bit, I would give it a chance, and if it just totally runs away and you see HARP at like, it's $3 or $4 higher, then just cancel the order or forget about it. But if it's still nearby, yeah, why not? Okay, why not? For those trades of the week, we leave a lot of that up to people's discretion because, for one, those aren't trades that we're calling in our chat room, so they're going to be less stringent at times than the ones that we call, for our subscribers. Okay, they're more like open, like more vague, to give you more room for discretion. All right, so let's see. Are we still waiting to be filled now? Okay. Right. So yeah, Michael, the answer is yes. I still have my orders open for that one. But like I said, if it runs away too far, I'll just cancel. There's no point leaving those orders in the market. You just cancel it. Give it a few days. If it doesn't get there, just cancel it. Okay? That's what I'm going to do anyway. I took a pledge not to take the hopium trade. Good, Ankit. That's good. Well, you've been doing really well. Okay? MCO is an altcoin, if I'm not wrong. Okay, yeah, I just learned about it. NCO, I was asking because I get on the low of the 13th. I'll sell the remainder of what I have. Thank you. Also thinking of writing out XLE while GDX goes. Okay, XLE. So XLE. Is that, let me take a look. Oh, energy. Okay. Yeah, so look, the energy sector is obviously, you have a higher low here, so you get some room. This thing should take out this lower high. You have the higher low, where there's a higher low is usually followed by a higher high. So you get some room to play with there. Not a bad idea. Gold, yeah, you got to leave that alone. That's pretty much, untouchable right now. But it will give us another opportunity, and we're just waiting for it. Same with silver, with the physical silver, because that's really what you have to do there. There'll be another opportunity. Okay, cool, Ankit. Cool. Well, I'm glad that, and that's the whole point of why we do what we do. It's not just trade signals. We want people to understand why we take the trade signals, because if you're on your own, you need to be able to have a thought process that's relative to the market and not relative to emotions, right? And the only way you're going to have something like that is first by understanding what moving parts have value and what moving parts don't, right? So now you guys know. It's all about behavior. Not buying highs, okay? Not selling into lows. That's very basic. It sounds easy, but you'd be surprised how many people buy the highs because, oh, this time is different, that kind of stuff. So it all starts with effective behavior, and then you refine it further and further into a set of rules. The effective behavior and the rules are what drive the performance, not, oh, I'm a skilled chart reader. One thing that people don't realize, I'll say this and then we'll wrap this up, because I've been talking a long time here. How long have I been talking? Wow, I've been talking over an hour. You guys are crazy listening to me for over an hour. One thing I want to say is people think that the challenge of learning how to trade is, charts and this and that. Anyone can learn how to read a chart in, a couple of months. That's possible. Anyone can learn how to place orders. That's not where the obstacle is for a market timer. The obstacle is learning how to rewire your thought process, learning how to rewire our own human nature. That's the obstacle that most people don't even realize is the obstacle, because that's what gets in our way, our own human nature. We have fear of missing out. We have fear of losing. We have all these different fears and bias. We have the bias, overestimation bias. We get a couple of random rewards from the market, and we think that we're good at this, okay? But those are the random rewards and the overestimation bias, tricking you into thinking that you're good at this. Meanwhile, you're still measuring the wrong information. So that's really where the obstacles are, and that's what we're trying to help our members really get good at, is developing the thought process and the effective behavior. And that's what will produce for you in the long run, okay? And then you also be confident with our signals and understand why we're taking them. And as you get better and more confident, you'll be also more confident with your size, and you'll be patient when you see things not looking right. You'll know when you should be patient, and you'll know when you should bang it out earlier, okay? That type of confidence is very important. Okay, anyway, so I'm going to leave it you guys with that. If you have any other questions, please share them in the chat room, and Andrew will get to them, or I will get to them. Cool, Hack. Oh, I'm glad. I'm glad to hear when our members make money. People that are following us. I'm really happy to hear that our perspective allowed them to have more confidence, and they were able to maximize their profits further, rather than they would have if they were listening to the news or something else. Okay, so very happy to hear that. Guys, if you're new to Greenbridge, please make sure to check out our website at greenbridgeinvesting.com. And, we have our swing trade signals there by text and by email. We also have portfolio management ideas, and we have our analysis, which most of you are in the chat room. Most of the people that you see here in this chat are in the chat room and asking great questions in there. And, we're also, Andrew provides a lot of great charts throughout the day, different ideas, different perspectives, and it can really give you a lot of insight. So I'll leave you guys with that. Make sure you subscribe to this channel. Give me a like if you like me. And I'll talk to you guys next time, okay? Thank you again for spending all this time with me, and thank you for all your great questions. I'll see you next time.